For those who are watching a long version of this show, we've just been talking about Pets at Home, which is a business that I don't know very much about because I haven't thought about it very much. Judges Scientific is a company that I have thought about very much, and I'm still equally confused by. But here we go. Let's see if we can find out why. Both Steve and I like the business. Trying to work out where the business is right now, I think, is challenging in a number of ways. So let's have a bit of a look. The stock itself isn't hard to work out where it is. It's down about 27% year to date. And the reason I say year to date is because I think we started seriously getting into what this thing was about in roughly January or so. I have sort of memories of looking at this about Christmas and reading some analyst reports around then for the first time. So since I started looking at it, it's all gone wrong for this company, at least at the share price level. In terms of the actual business level, it's all gone, well, everywhere. It's down about 47.5% from its peak, which was April 24. And they've come out with their latest H1 results. And at first sight, things look pretty good. If you listen to the long version of this show, you've heard this bit before. But at first sight, you're looking at revenue growth of 15%, taking us to 70.2 million. Pre-tax profit growth of 17%, taking us to 12.6 million. And some adjusted, admittedly, EPS growth of 14%, taking us to 141.4 P. This is growth then in the teens. This is not traditionally priced as a kind of super cheap stock, but 15% revenue growth is 15% revenue growth, isn't it? Well, the running theme of this show is not really. Judges Scientific does break out its quote-unquote organic revenue growth, and we'll talk about what that means in just a moment, because it doesn't just mean stuff from the existing businesses rather than from acquisitions and so on. They break this out by geography, which is quite interesting in the markets that they've sold into. And there's some ugly numbers coming and then a really massive one, which is less massive than it sounds. So here we go. Organic, as it were, sales growth from the US was down 18%, down 7% in the UK, up 7% in Europe, up quite a lot in India, France and Italy, which are not massive markets for the company just yet, although they're worth reporting on, apparently. And in China and Hong Kong, revenues are up 120%, which is a big number even by Nvidia's standards. The thing is, in H1 of last year, revenues in China and Hong Kong were down 65%. So what you are looking at here is very much weak comps. And if you work out down 65 and a bit percent and then go up 120 a bit percent, you get back to not quite where you started. So we're below where we were a couple of years ago in China and Hong Kong, and everywhere else appears to be going backwards. But signs of a recovery in China are kind of interesting. So all that gets you to plus 7% organic growth. What's the difference? Well, it's a company that we have to a company, business, similar subsidiary in the case of Judges that we've talked about here before, which is Geotech. And Geotech is a coring operation, or coring expedition operation. What they do is go around the world basically poking cores out of the earth like a sort of giant apple with a big apple core, and then they take those cores off to be studied so you can find out interesting geological facts like and as well as someone somewhere will fill some gaps in there for me. But anyway, important things. Lots of Judges Scientific, by the way. This is not to put the point flippantly. It's just too scientific for my ability to put into straightforward English for you. So where are we at the moment on the basis of this? Well, Geotech did go on a coring expedition, and the reason that that's kind of significant is because it shows up in the H1 results. You might remember, very, very avid listeners of the show, talked about Geotech's coring expedition as not happening in H2 of last year, as it was delayed. And I think we made the point that it's delayed, not cancelled. That revenue will show up, but the expedition, which I think was in Japan, didn't happen last year when it was kind of expected to, but it is happening now. So it's a slightly odd one. Geotech is very much, it's not a cyclical, but it is a lumpy business. When they are off doing expeditions, they make loads of money. The trouble is, a lot of the time they are not off doing expeditions, and the gaps between their expeditions are very, very irregular. So they might do 2 in 2 years and then nothing for 4 years. And that seems like it's hard to work out, I think. And I'm trying to figure out how to factor this into a company like Judges Scientific, right? Because on the one hand, This is not a one-off boost. It's not like a tax rebate or something where you say, look, we'll just ignore that from underlying stuff because it's not happening again. It better be happening again. Equally, though, it's not like we can say, don't worry, it'll come around next year like the December surge in consumer buying or something, because, I mean, it almost certainly won't. But when will it show up again, and how much will it show up again for? Not really, no. And that makes predicting things, given the fact that this is the difference between a 7% organic growth and 15% organic growth in terms of sales, and 7% is not terrible, but 15 is great. You get to a point where you start thinking, well, this is really quite significant and a large, noisy thing that makes forecasting and pricing and valuing and all sorts really, really difficult. But let's try and do a bit of thinking then about where we are elsewhere. So the US, is the big downer in terms of geographies here. And the reason for that is that scientific research funding has been very, very hard to come by in the US, and the political environment is a kind of big part of that. My own sense with this is that this is a temporary thing, but I don't know how temporary it is. I strongly suspect that the US is either a change of government or one big crisis away from realizing it doesn't want to be underfunding scientific innovation. And not all scientific innovation is the same, and Judges Scientific is not involved in, or doesn't have subsidiaries involved in all scientific innovation stuff. But my sense is that this is the kind of thing that you don't invest in until you kind of find you do have to invest in it, in the same way that it's much like energy, to be honest. People kind of do interesting and high-minded things and try and save money or invest money and then realize, actually, it's really freezing and we could do with some oil, or actually, we could do with some renewable energy or something. And there seems to be a kind of wild lurching between things here. But my sense is this is temporary for the US. I don't know how long, but I don't think this is permanent. Signs of recovery in China, I guess they have to be encouraging. I was kind of interested in this for other reasons, and one of those reasons was Renishaw, which you've now just got rid of, Steve, handily. But we've seen a lot in the kind of precision manufacturing space from FTSE 250 alike companies. Judges Scientific is not one of these, but Renishaw is, and Spectris was another one that's now been acquired. Precision manufacturing largely comes out of China one way or another. And at least for the time being, when things are going badly there, it goes badly for all the people who supply equipment for them, including Judges Scientific. That coming back round, I think, is encouraging. And I'm not as carried away by this idea of a massive boom in Chinese consumer spending as other people are. And so I'm watching Burberry kind of carefully, but with a degrees of suspicion. And I'd very much like it, though, because I own LVMH for that to come back pretty well. But, okay, positive signs in China, negative signs in the US. Where are we in the grand scheme of things? We're at a PE ratio of 21 based on adjusted stuff, but that includes a big Geotech lump in there. It also includes stuff like the US being kind of weighed down, China starting a recovery, but from a low base. And my word, this is difficult stuff, I think, to figure out here, Steve. I mean, I don't like doing segments where I say I don't know and it's too difficult and so on and so forth, but Geotech is so unlike other businesses that we've seen, where revenue comes in big, extremely erratically, and nothing in between, that when it has that kind of impact on stuff, you don't want to take it out entirely, because it will happen again and you will get this wrong in terms of your valuation if you just ignore it. But I'm not entirely sure what my strategy for trying to figure this one out at the moment is. You own it as well, and so does the Britbox. Say something more constructive than that.
I don't really have anything more constructive, but I'll give you an analogy. You know, a business that's kind of firing on all cylinders. So when we look at NVIDIA and we go through and we say growth, everything looks amazing. This business is firing on all cylinders. This is kind of a business that's firing on some cylinders, and some of the cylinders that we were hoping would fire have not quite fired yet, or they're in the preparations of firing. So this was, and this is not to be, I don't want to be too flippant about this. This was a record revenue half for Judges Scientific, but it should be. They make acquisitions all of the time, so you should steadily see, revenue creeping up. But it wasn't a record in EPS for them, which kind of shows you a little bit of how it's going. I think if anybody's listening to this on the full version, it's a story that you heard us say, way back at the beginning of the show. It's a very similar kind of problem, but there's a little bit more organic growth here than there is at Gamma. They're getting close to that 90% cash conversion range that they want to get to as well. That's an operational thing for us as shareholders that we would like to see. And obviously, shareholders, we just love to see the dividend going up massively. So look, this is a really good report. So if you want to have a look at how a complex business reports and tries to explain to you how its business works, it's one of the most honest and information-packed reports that you will get. And the first chunk that you will see is basically what Steve and I have talked about under the group revenue section, is that quite a lot of that is Geotech. And the company is essentially waits for Geotech to get funding to go out and do this high margin, high expense coring. And normally Europe and America and a little bit of Britain are kind of behind the funding of this coring and expedition kind of thing, I guess. And what's happened is Trump has come in and there's been a bit of a pause, and that Europe has picked some of the slack up. We're doing a similar amount, but not a massive amount. China has gone from a slump to recovering somewhat. But across the whole spectrum of Judges Scientific, you can almost apply that across every business. The scientific instruments have been a little bit weaker than they expected. If you pull up the order intake on their presentation on page 8, you will see the red line of their budget. This is what they were expecting intake to be like. And for the last sort of couple of years, really, they've been under this kind of budget line with just a few spikes touching the budget line. They've never been above it. So this is saying that perhaps the budget setting is potentially not the best, but also that they are expecting this market to pick up at some time. And this is honest and experienced management who you would hope would have a little bit of foresight in this. The other thing I would just sort of stick on, because I'm acutely aware we are quite a bit over, Steve, is that their growth strategy is essentially M&A then or organic growth. And what they look for when they make acquisitions essentially are strong exporters with solid EBIT margins that generate sustainable profits and cash flows. They aim to pay between 3 and 7 times EBIT according to the size, and they hope to borrow at about 3 times EBITDA, somewhere between the 3 and kind of 8% kind of range. And they basically say long deal incubation periods, crystallization, honourable process, financial certainty for the seller, and then reduce debt and reinvest for further acquisition. So this is the stage we're in. This is the kind of cycle we're in. It's not, you look at something like Sartorius, they've had a similar kind of period, as have the company in Switzerland who Tecan Group. They've had a similar kind of, a very similar kind of market performance to Judges Scientific. But what I like about Judges the most is that they're the only ones out of this group at the moment that are going out and saying, right, who else can we buy? Who can we tack on? How can we make this better? Because when we get out of this cycle, and if this is the trough for earnings, you would want them to sellotape on as many businesses as possible at these kind of prices, so that when we move into the next part of the cycle, those earnings look better and better. If you look back through things like their revenue and profit on pages 13 of the report and their cash generation on 13, you'll see this isn't abnormal, really. What you see here is a cycle. You see, growth, and then it flatlines for a period, and then growth, and then it flatlines for a period. And this tends to be how Judges operate. What we're seeing here is the flat period, and what comes next, we hope, as investors, is the growth period. So that's really my take on it, Steve. I think it's a hideously complex business as well. But at some point, when you're make an investment, you get as much knowledge as you can. You learn as much about the business as you can, but at some point you've got to trust management. Now, you can keep going and keep going. Maybe you're a specialist in the industry, you could learn more about the products and things like that than I'm capable of understanding. But at some point, even those people have got to turn around to management and say, "Well, I hope you perform." And that's kind of where I sit with it, Steve. I think it's been a fantastic business. It's the CEO is um, a major shareholder in the business. I think he still owns about 9.5% the last time I checked. So, he's got skin in the game and he's refreshingly honest. I don't sense that he's trying to cover up anything. He tells you exactly what he's expecting, what he thinks. And they give you a full overview of all the businesses and how they're doing every time they release a report. And I'm relatively comfortable with this one, even though the price is falling. I don't think I'm just holding on for dear life. I think potentially I didn't get it as cheap as I could have done. That's my issue. I didn't get the entry right, I guess. Who can? But I think I'm relatively comfortable with holding this one long term and seeing what happens when we move out of this kind of lower point of the cycle.
Yeah, Investor Chronicle covered this, and they were saying that the CEO had said we've had 2 bad years in a row, and so this is unusual, and it is unusual for judges. They don't normally get themselves into this kind of situation, and I say get themselves into the same situation. I mean, bind themselves in this kind of situation. It's not really a problem of their own making. It means it's not really a problem for them to undo either. But in terms of trying to work out where they are in the cycle, well, they're clearly not at the top. I was looking with the way that I kind of sometimes think about cyclical businesses, because their earnings and their revenue and earnings are all over the place from what I can see at the moment. Looking at them on a price to book basis, they're currently at 4.8 times. If you read backwards over the last few years, where they've been has been 12.2, 12.1, 12.2, 9.9, 7.3, 6.4, now 4.8. Interest rates have largely been going up during that period. So way, way, way low from where they've been in the last kind of 5 years or so. That said, before that they were 3.8 and 3.73. So there is scope for them to go lower. They're in uncharted territory in terms of operations for the moment, but not in terms of pricing. I still like this a lot for the reasons that you said. The main thesis for owning this is that it's a good business model being run by good people. It feels a lot like scientific Berkshire Hathaway of buy businesses, look for businesses where you're looking for someone who basically wants the big payday from building their business, but still wants to keep running the thing for you. Berkshire's problem is that they don't tend to be massive organizations that are needle moving here. Judges does not have that problem by any means. It's got a much smaller size. I think there's enough there to keep me interested in this, and I started buying it. I think maybe 20% higher at the moment. We're down by a bit less than that. I was about 15 or so percent higher as my price point here. I don't like it less than I did before. Nothing in these results causes me to think otherwise, so I guess I should still be looking at adding here, Steve.
Yeah, I feel pretty similar to that. So one of the things I did see on a different podcast, which we won't name because we don't slander podcasts who say things that we don't disagree with, is they said that they thought Judges Scientific had now got too big to continue making acquisitions, and I just fundamentally disagree with that. I mean, for Judges Scientific to buy a company that is, say, 5% of its market cap, that would only be spending about 20 odd million quid on a company. So that's not. Are they going to find plenty of companies of that kind of size that they can buy that will, and 5% will move the needle for them if they make two of them a year. So I thought that was largely nonsense, really. And Judges Scientific are more than happy to buy and build as well, and to provide funding to grow. So Judges remains the perfect home for these kinds of companies who want to, potentially the owner may want to retire or want to to leave, or maybe wants to sell the business to get the capital but continue running the business. Judges Scientific remains the home of choice for a lot of these companies, and I really hope they've got the sniffer dogs out, Steve, looking for the next acquisition, because I think that is what they need to do from here to to start showing good results in the future.
Yeah, the size argument doesn't particularly convince me, especially not for something the size of Judges. I remember not so long ago having a similar worry about Halma, which is a bigger operation in a FTSE 100 thing. As I look now, they have a market cap of just under 13 billion. And what happened was I then went and had a look over across at the States and some of their high-performing conglomerates, and so Illinois Toolworks at 77 billion and Dover at 24 billion. These are in dollars and Halma's is in pounds. And thought to myself, yeah, okay, so those companies are starting to slow down and starting to run out of easy expansion road a little bit, and you should expect less from companies as they get big. But even Halma's not big, and Halma is bigger than Judges. So I sort of thought I don't buy the argument about size. You can argue against this in a few other ways, but I'm not concerned that this is starting to bump up against the level of Berkshire Hathaway like struggling to expand type territory. You've been watching a segment from the Playing FTSE show, brought to you in association with our favourite broker, Trading 212. For the full version of the show, check us out on Spotify, Apple, or wherever you get your podcasts. And if you open a new account with Trading 212 using the link in the description, there's a free fractional share in it for you. Just make sure that you use the code FTSE when you sign up. Terms and conditions apply, and do remember that when investing, your capital is at risk.